Are you ready to future-proof your portfolio for 2025? Today, in this short video, we're going to talk about 3 proven strategies that are ideal for 2025. And we're going to talk about 3 of the hottest stocks in the AI sector. So whether you're a beginner or an experienced option trader, there's something in this video for you. Before we get started, be sure and hit the like and subscribe buttons down below. Also, download the free options workshop. We talk about the main benefits of trading options over buying stocks. The AI market is poised for explosive growth. Analysts are predicting the $214 billion industry to grow to over $1,300 billion by 2030 at a 35% annual growth rate, which is incredible. The key players in the AI landscape include NVDA. They're the undisputed leader in AI chips. NVIDIA's stock price is projected to reach between $200 and $225 in 2025. AMD is a strong competitor in the AI chip market, and Broadcom, ticker symbol AVGO, recently joined the $1 trillion valuation club, specializing in AI networking solutions. Companies like Upstart, Supermicro, SoundHound, and MRVL Technology are emerging players, and they are capitalizing on various AI applications. Some of the key factors driving AI performance in 2025 include continued demand for AI infrastructure, particularly in enterprise solutions, edge AI growth with enabled PCs and mobile device expanding. Potential market saturation and valuation concerns, however, have some analysts predicting an AI bubble burst, which, guys, I don't think that's going to happen. And the shift from cloud reliance to in-house AI infrastructure investments is going to play a key role as well. Guys, LEAPS options, which stands for Long-Term Equity Anticipation Securities, are options contracts that extend out to 9 months to a year to even up to 2 years or more. And LEAPS should definitely be a part of any portfolio for AI stocks going forward with the huge growth potential. Some of the benefits of LEAPS options are capital efficiency. They allow investors to control a larger number of shares with less upfront capital compared to outright stock ownership. The extended time horizon, so the longer duration of the LEAPS provides more time for investment thesis to play out, and reduced time decay. LEAPS experience slower initial time decay compared to shorter term options. All right, guys, we're going to start off by taking a look at buying a LEAPS option in Supermicro, ticker symbol SMCI. We punch that in right here. I'm on the Tasty Trade option trading platform. There's a link down below. This is a great option trading platform, and there's some benefits if you join through my link. I also utilize Moomoo, so check that one out as well. 2 of my favorites. Now, we're going to be on the trade page and table mode. And then what we want to do, I like to look out over a year, and we're at 386 days to expiration. Sometimes I'll go 9 months, but August is a little bit too soon, and they don't have September for the regular option change for Supermicro. So I'm going to look out to January, and I've already looked at the pricing. It's pretty good. But we can buy the deep in the money. So right here, if we click on the buy, calls are on the left, puts are on the right. We want to buy a call, and so we'll click on the buy for the 30 strike, so in the money, because we're at 33 right now. And then we will click on the mid right here, and we can see we can get that for $13.70. Now, if we go to curve mode and analysis, we can see as the stock price increases, we make money just like owning the stock outright. And if we go to table mode, it's basically a 73% mirror of owning 100 shares of stock. But to own 100 shares of Supermicro at $33.89, that cost would be $3,388. We're spending about a third that, $1,370. So we could hit review and send and place the trade. Why I like Supermicro, again, these guys are the leaders in servers for AIs, and they have liquid-cooled servers that consume like 40% less power than some of the competitors. So they're dominant in the data centers in providing their product. And if we look at the chart, we can see this is over the last year, and it's way down. They had some accounting. Actually, we're on 3 years, so let's go to 1 year, and then we're going to go to daily. But you can see it's way down. We were up at 120 not too long ago, within the last year, and we're way down here. And there were some accounting errors apparently, but I think they've proven to not be a big factor going forward. The RSI is down here. I like to look at that, and we are kind of in an oversold position. And we've got the 13-day moving average in the green, the 50-day in the red. So we're just about to pass up above that. And then the 200-day, we're still below that. But this is a no-brainer leaps option trade for me, and one that I'm doing in my portfolio. So be sure and check this one out. By the way, if you'd like to receive the free options strategies trading guide that outlines all the different strategies as well as how to manage them, comment options guide down below and I'll send you the link. All right, guys, now let's take a look at a variation on the leaps option, which is the poor man's covered call. And we're going to look at a trade in AMD. And this is going to allow us to generate income while maintaining a bullish position. Guys, AMD is a great AI stock. They focus on CPUs and GPUs and compete with NVIDIA and Intel. And they're dominant in the gaming industry as well. And they've got very competitively priced server data center solutions as well. A little bit less costly than NVIDIA, a little bit less performance, but a great market fit. And there's huge demand for AMD going forward. If we look at the chart, we can see it's oversold. It's at a low. Great time to go long with a poor man's covered call or a leaps option. So we're going to go to the trade page. And on this one, I'm just going to go out to September because I'm going to trade calls against it. And then I'm going to go to the 110 strike and again, click on that buy. And we can buy that option for $29.85. So the leaps option, we're controlling 100 shares. And again, we're at the 70 delta. So good duplication of owning 100 shares of stock outright, which would cost $12,567, but we're only spending $29.85. Now, at the same time, watch this. We're going to close this option chain, and then we're going to open up the February, 57 days. I like to go close to 45 days, and then we can sell against it. We can look at the 27 delta right here and sell a call option against it all the way up at 145. So we've got a $20 potential move that we can make on the leaps option going forward. But what we're going to do is collect by clicking on the bid to sell. We collect $375. So you see the price come down on the total solution to $25.95. So that's huge. If you can get almost $400 and do that every month and repeat it, then that's income. That will pay for the option itself in less than 6 months, and then you'll control 100 shares outright. And we hit review and send and place the trade. Now, guys, AVGO, ticker symbol AVGO, is a leader in custom AI chips. So they compete with Intel and NVIDIA, but really their specialty is ASICs. So they're the custom chips, and they're the big guys in that sector and heavily involved with AI. So it's a great stock, and you'll see by the chart that it's already up pretty high. So we're going to do a little bit different strategy. I want to be involved in it, and the IVR is pretty high, the IV rank, so we can collect good premium from trading both sides. It's so high that I don't think it's going to explode up much further, and it's so good that I don't think it's going to move down much further. So we're going to look at an Iron Condor in AVGO. All right, guys, so AVGO, AVGO, right here, Broadcom. We're going to look at the chart, and you can see it's up, but I think it's going to stay in this range and trade in that range for a while. So what we're going to do is an Iron Condor. We're going to go out to February, 57 days to expiration, and I'm going to click on the 22 delta put. I'm going to sell it, and then I'm going to buy the 210, And for this, we collect $2.04. I don't think it's going to drop too much below 220. And you can see the profit zone right there. But now we're going to sell another one on the right, on the call side as well, because I don't think it's going to skyrocket up. So let's go back to the trade page, the table mode. And then let's look way out here at the 280, the 26 delta, and then we'll buy the 290. So the most we can lose is the width of the spreads. We've got $10 on both sides. We're going to collect $3.67, which for 100 shares of stock is $367 that we're going to collect upon placing this trade. Now, if we go to the curve mode again, you can see we're right in the middle of that profit range. And 220 and 280. So if we go on the chart, we just need to stay in this range between 220 and way up here. Wow, 280, way up there. So even higher than that. Maybe I should have gone tighter and collected more. So if we collect, we can go 270, 280, and we can collect $432. But I like to be safe, and this AI is really going big. And what I'll do is I'll just go ahead and roll it to the next month if we get tested on one side or the other. And at the same time, if the stock price moves way up, then we can roll our put side up as well and collect additional premium. So we hit review and send and place the trade. All right, guys, we've just showed you 3 great strategies in 3 excellent AI stocks. Let me know what strategies you're using and if you're trading these stocks, or if not, maybe you've got another AI stock or another different sector that you're looking at. Let me know in the comments below. Ask any questions. I answer every one. Remember to hit like and subscribe. Download the free options workshop. And thanks for watching. I'll see you in the next video.